Now, I do want to start off with the China numbers here. I guess it's not a total surprise that we didn't see any sales there, but does this give you concern longer term about what their ability to have access to the Chinese market will be?
No, I mean, I don't think so, Roman. They weren't allowed to ship to China last quarter, so, and they told us they weren't going to have any revenue to China. I think it really depends more on what they talk about for an outlook, and actually, the lower the expected China number is in fiscal Q3, the better off you are in the sense that the less contribution they're expecting from that geography, so that the better their organic growth looks, if you will.
I think more broadly, talk to us on a quarter-by-quarter basis and a year-by-year basis. Look, the market had basically front-run this in many ways. Last week, you had 9 analysts upgrading their expectations. This week alone, on Monday, you had 2 extra increase their price targets. People were anticipating good numbers. Was this beat not enough, more broadly? They're coming in line for their fiscal second quarter and basically in line for the forecast as well.
I mean, the market's telling you that expectations had lifted a bit more. I was one of those analysts who upgraded my price target last week. But something to think about here is that Nvidia almost always leaves, or over the last few years, they've left something on the table, and that something has consistently been, $2-3 billion. So when the guide to $54 billion. Well, what it seems like they've been telling the street is more like they can do 56, 57 billion. I don't think anyone's going to be disappointed if at the end of Q3 they're coming in at those type of numbers.
When we talk about the idea that this is still a company obviously generating a lot of revenue, a lot of cash flow, and incredibly healthy margins, particularly for a company its size, Matt, where is the growth story for this company longer term, given just how outsized that growth had been over the last 3 years, and what is sort of a growth rate that you're comfortable with?
Yeah, so I think the growth story is pretty clear. It's right now. We are testing these really large models, and that's where a lot of NVIDIA's revenue is coming from. But going back to that MIT report, only 5% of companies are realizing value. I think the growth comes from both businesses and consumers bringing inference into their workloads, right? So getting real applications out of generative AI, that's what drives revenue.
What's interesting is when you go into the statement and they talk about all the wins they've had in the previous quarter, revealing model builders across Europe and the Middle East. They're talking about sovereign AI. They're talking about adoption in European nations, France, Germany, Italy, Spain, the UK. Matt, how much do we need to hear Jensen Huang really articulate sovereign AI versus this dependency of about 40% of their revenues on those few hyperscalers?
I think sovereign AI is really important. I think it's really important in 2026, right? Romain was asking me how they get to growth numbers. I think they can do well over 30% growth next year, and I think sovereign's really an important part of that. I think Jensen talking to that is important, but I also think that people have made those commitments. The part of the reason that NVIDIA, is kind of a safe investment here is there will be more model building next year. There will be more data center spend next year. The real question is, by the time you get to the end of 2026, do we begin to see those inference applications show up to drive more data center investment as well as more consumer investment? And I think that's where 2027, 2028, those legs of growth come from.